How's it going, everybody? My name is Antonio, and you're watching another episode of the CEO Barbecue, where I turn up the heat in the C-suite with no fluff, just fire. Joining me on the barbecue today is Simon Clark, the newly appointed CEO of American Potash. But of course, nobody's getting grilled and nobody's traveling before we've gone through my favorite part of every episode, and that is, of course, the warning that you see on your screen right now. For one, you're actually obligated to read and understand what it says. And if you're not able to read or understand what it is, or if you don't agree with it, you cannot be consuming this content. This is not your basic disclaimer of I'm not your financial advisor, although it is partly that because I really am not. This really is an actual warning that might help you not lose money, which losing money, by the way, is the norm and should be the expectation in this sector. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including geopolitics, macroeconomics, commodity prices, and many other complex things. In addition, I need you to understand that this channel is a business that produces video interviews in exchange for monetary compensation. And although this company has not paid me to produce this video interview, you should still treat this with a dose of skepticism because that is the general business of this channel. As a rule of thumb, you'll be better off understanding that all company communications online, and I used to say most company communications, but I really believe it is all company communications online, albeit this interview, whether it's paid or not. As I said, this one is not paid, but that doesn't matter. It should still be considered marketing, including their website and their presentation and their social media accounts, and everything else that these companies do online is intended as marketing. And although I don't make buy or sell recommendations, irrespective of whether the company has paid or not for video production, because there is a clear conflict of interest, in my opinion, many out there will do exactly that. And you should be aware of that inherent bias. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is either being compensated monetarily for it or in a different way, which would make them biased, because there will always be a bias of sorts, again, albeit disclosed or not. Unfortunately, at least in my understanding, nobody out there has any special parahuman abilities. And the same goes for me. I'm not a magician. The guests here are not psychics. So none of us possess any superior knowledge about what is going to happen in the future. We don't know whether any of the company's activities will result in a success or not. That is a very big risk in mineral exploration that can and will be reflected in the stock price. Also, unfortunately, try as I may, I am not always going to catch all red flags or all challenges with the company or all shenanigans, whatever it might be. As it has become obvious by now, I don't have a long enough track record to speak of, and I still have no idea what I'm doing. So you should never rely on anything that you see or hear or experience in these videos. And I cannot guarantee the quality of anything presented in this video. This all is to say that you should not blindly trust me or anybody on the internet, and you should always do your own research and approach everything with a healthy dose of skepticism. Charlie Munger has many great quotes, but there is one that is very fitting to this line of investing, speculating, whatever you want to call it. If you don't understand it, he says, don't do it. In addition, no guarantees are going to be made here besides one, and that is that there will be forward-looking statements in this conversation. This is a conversation that is general and impersonal in nature, containing hopes for future events that may or may not take place, again, depending on many different factors, both within and outside of the company's control. Please be aware of that. Be aware of the inherent risk to investing and the increased risk of investing in non-revenue generating companies, and specifically the risk of those companies that operate in the harsh and complex reality of the mineral exploration industry. And please talk to someone who's proven to know what they are doing, like a professional investment advisor with a good long-term track record, as well as You yourself are responsible for this. You are responsible for your own portfolio. So please do more research. Research is not completed on social media or on YouTube. Research is completed on setterplus.ca, where you'll find the company's official filings, among which the management information circular, the management discussion and analysis, the financial statement, and the NI 43-101 technical disclosure. If you don't read that, and if you don't analyze that, if you don't do more research, you are highly likely to lose your money. There are disclaimers on your screen right now. Again, if you don't enjoy losing money, pause the screen on each one, read them, understand them, and be careful out there. With all that said, I can actually kick off this interview with Simon Clark, the newly appointed CEO of American Potash. This company is listed as KCL on the Canadian Securities Exchange, where an average of only about 40,000 shares trade each day. And I see a 52-week high that's sitting at 10 cents and a 52-week low that sits at 3 cents. With a market cap of about $10 million and about 124 million shares outstanding, today this is an 8-cent stock. 64.6 million warrants and 8.8 million options added to the shares outstanding leaves us with just under 200 million fully diluted shares, meaning an increase of about 60% in shares outstanding can be expected if those options and warrants get exercised, which would then result in about a 37% ownership dilution if, and that's always a big if, but if those warrants and options actually get exercised. I don't see the share registry in the presentation here, so I don't have the exact shareholding split or ownership numbers, if you will, but I'll be asking about that later on. The last financial statement, which is dated July 31st, shows me at the time virtually no cash and a little bit of prepaid expenses and some receivables for a total amount of $34,500 in current assets, and total liabilities, or well, at least the current liabilities, sat at about $300,000 at the time, with the majority of that being accounts payable and accrued liabilities, a good chunk of which can be found back under Note 8 in the related party transactions in the form of management fees. Although it is worth noting that American Potash did raise over $1 million in 2 tranches closing in September of this year, so the financials will look different by now. That same financial statement from July, though, also tells me that on average, over the last reported 12 months, American Potash spent an average of $51,000 a month on what I would call administrative expenses, where over 53% of that total spend, or about $330,000, went into investor relations, website, and marketing, and about 25% went into management fees, with various smaller expenses making up the rest of that spend. According to the balance sheet, exploration and evaluation expenses here get capitalized, which means you can find more information under Note 5, which tells me that in total, the company spent about $606,000 for the full fiscal year. So that is an average of just a little bit over $50,000 a month on exploration and evaluation expenditures. Mostly, so specifically over 77% of the total spend can be attributed to federal permitting, with a smaller amount attributed to staking, but no drilling or actual exploration really happened during that period, at least according to that financial statement again, which is something we'll talk about later on. But in terms of ratios, that means the exploration and evaluation to administration ratio, if you count the permitting expense on that end, would be sitting at about 1-to-1, with a slight bias toward administration. And hopefully, again, we get a clarification on that later on, because well, hopefully we get to understand where that's going to be in the future, because again, that's not where we want it to be long term. And as always, I would like to remind everyone that this financial statement is nothing more than a snapshot in time. In this case, it is specifically at the end of July of this year, and the finances will have changed by the time you're watching this, because this is a non-revenue generating company that uses its treasury as well as the public markets to finance operations. I'm also not infallible, and I'm no stranger to mistakes, so I might be making mistakes in my reading or understanding of the numbers. So to be safe, you should head over to setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. For American Potash, that full picture is actually not only focused on potash anymore, as they also have a lithium target, and they've now requested a name change to American Critical Minerals. There's a whole lot that I can say here, but what's really going on behind all these financials, management changes, name changes, and project additions is hopefully something I can find out from the conversation here. But Simon, this is your first time on the barbecue, so we're going to have to go through the smell test first. starting with you personally, as you recently just joined the company, but who are you and why should I trust you with my money?
Yeah, thanks, Antonio. Very, very good summary. Yeah, my name is Simon Clark. I'm the CEO, president, and a director of the company. I joined on September the 1st. So my background, as you can maybe tell, originally British, grew up in Scotland, trained as a lawyer, um, qualified in Glasgow, went to the bright lights of London as a securities lawyer, and then switched to become a small mid-cap banker, investment banker, corporate broker in the mid 90s. And then out of the blue, got offered a job in Vancouver with Deloitte on the corporate finance side, came out with that, and the job wasn't really what I thought it was going to be, but it got me to Vancouver. Beautiful place to live and bring up family, and it got me into the junior world, and I've been in that ever since. So, I've been involved in resources primarily, some energy technology, and I guess some of the earlier stuff I was involved in was oil and gas. I was involved in founding a big oil sands project in the late in 2006, 2007. And that company proved to be very successful. I was originally an officer. Then we brought in more of an Alberta-based team as the company grew, and I stepped back to being on the board and remained on the board till it was sold in 2021 for about four or $500 million. At the height of the cycle, it was closer to 2 billion. It was a 25,000 barrel a day producer. So I enjoyed that. It was a really good soup to nuts education of resource plays, and we attracted some very big players and very big investors into the company. So, that was a major thing for me. As I say, I was also involved in energy technology on the storage side. And really, I guess all those themes came together in the I guess 2015 when I got involved in critical minerals on the mining side, and was a founder of a company called M2 Cobalt, which was exploring in Uganda. The thesis being that the cobalt in the DRC is far and away the best and biggest assets in the world, and surely it doesn't stop at the border. There was a history of copper cobalt in Uganda, and we did some very good exploration. And along the way, whilst cobalt was still in a good place, we were taken out by an Aussie group, really an offshoot of Glencore. A lot of the management were ex-Glencore's nickel cobalt group. And so they acquired us in 2019. I joined them first as a director and then as part of management, as part of the transition, and stayed with them until really, COVID hit in 2020, and then was offered a board position with American Lithium, big Claystone asset in Nevada. And I became CEO of that as we acquired a Peruvian company called Plateau Minerals, which had a big hard rock deposit on the lithium side and uranium. And I ran American Lithium until end of August this year, so for about 4 years, 3 or 4 years. And but I got attracted to American Potash by some really classy individuals. I looked at it; it's a very undervalued company in my view. It was founded by a well-known geologist in Vancouver called John Gregg, who put the asset package together. John's well known for probably finding 40 million ounces of gold over his career. And he also had an oil and gas background, so knew the Paradox Basin. There are not a lot of potash prospecting licenses issued in that part of the world, and he put together an amazing package of assets in the heart of the fairway, right next to the only real producer of MOP in the US, which is Intrepid Potash. They've been producing there for 50 years. And so he put it together, and it's been backed through a lot of trials and tribulations. They unfortunately lost the federal potash assets, and it took about 8 years to get it back. over that time, lithium obviously became more and more of a thing, and lithium brines is now a huge part of the puzzle. But so John founded it. That was key for me. Andrew Williams and David Elliott from Hayward have backed it. They probably control and speak for 60% of the stock, with John probably still controlling about 10%, and other brokers at Hayward maybe another 10%. And they've seen the value of this asset and stayed with it over the last 10 years. As I say, it took 8 years to get the federal licenses back. So I saw a great opportunity, and it was time for me. I'd really enjoyed my time at American Lithium, but this was a new challenge, a company no one knew anything about for a number of reasons, but a very large asset at a time when critical minerals are going to be more and more relevant. So, long-winded answer to your question, Antonio, but I hope that gives some good context of who I am and why I joined.
Is this your only gig right now? Do you have other management positions or board positions?
I'm chairman of a uranium company called Myriad Uranium.
Okay.
A good friend of mine, actually, one of my partners from my cobalt days, is the CEO of that company, and he asked me to join the board, which I did, and then to become chairman.
Okay.
So I'm excited about that asset, but obviously, American Potash is my day in, day out focus.
Hmm. Where I'm coming from with this, because I'm thinking legal background, oil and gas experience, a little bit of uranium experience, and uranium involvement right now, a little bit of a 3-4 years experience in lithium. But where do you see your specific skills fitting into the American Potash story? Is it specifically in the permitting process? Is it bringing this thing into production? Where exactly do you see your skills fitting?
Yeah, I think listen, when I was a lot of what I did for on the cobalt side and for Jervois in particular was on the political side and the permitting side. Same at American Lithium. I mean, obviously the lithium play, critical minerals in the US is a big piece. I spend a lot of time in Washington and a lot of time at various conferences presenting the company. So yes, I think that side of it is a big piece. I think raising money, raising awareness, being able to get out there and tell the story. As I say, this is very undervalued. But I think in my time as well, I've learned enough to be dangerous on the technical side. And I think I have a pretty good understanding of what we need to do with this company over the next year or so. We already have a lot of strategic interest. As I mentioned, it is one of only two federally approved prospecting companies in the whole of the Paradox Basin on the potash side. It's well positioned, but we do need to do, we know from the history of oil and gas and all the logs and, what's been going on around us, what we're going to find, but we still obviously need to drill out some confirmation drilling, validate the exploration target that Agapito put together on the company 10 years ago, and then also showcase the lithium asset, which we know is there and which has been worked on by a number of players around us.
Hmm. And I will definitely get to talking about that. It's my intention to first and try and understand the vehicle and how it operates, and especially because it's kind of been, well, at least a little bit restructured, renamed, and stuff like that. So we'll get to all these things. But who is it again that you said owns 60% of the company now?
Hey, David Elliott was a founder of Hayward. I don't know if you know
Yeah,
Hayward. Obviously, they're a well-known resource
sure.
investment firm in Vancouver. David Elliott was one of the key founders of that, and then Andrew Williams is his partner. And so, they raise money for companies and projects. They're very focused on the technical side, on finding good assets. And as I said, one of the guys that they've backed throughout their careers has been John Gregg and throughout his career. And so they've been, even through some turbulent times over the last 10 years, they've effectively kept this company going by raising money for it and keeping the lights on, paying the license fees. And waiting for a time when, the licenses were returned and the company could drive forward and execute on its plan. So
What
they've
about
stayed with it a long time.
what about direct insiders though? I mean, you or Dean or Colin, what Eric, Steve, who else? Yeah, how much do you guys own?
Yeah, so I think between us, probably somewhere in the 5 to 10% region. I'd need to add it all up. I've obviously got involved and put money in the last financing. I'm putting more in this financing. We obviously have options in our issues as well. It's a new team. It's a new team that I've brought in. If you're looking at the inside side of it, John Gregg is probably technically, I think he's around 10%. So, I would see John as a key insider. And he was the guy that put the package together. So probably including him, probably 15% across the key management and inside team.
And those are shares that you guys bought in the open market or during financings,
Yeah.
or are we talking about founder shares and other stuff like that?
No, John has supported every financing I think that's ever been had in this company. And as of Andrew and David, now obviously a lot of what they do is through their clients as well as personally. So if you're looking at direct insiders, as I say, I would include John in that, and then the current management team. But bear in mind we changed the board out literally over the last several months. So this company has moved from what I would term a lifestyle company from the management perspective and the board perspective to putting a real team together.
Hmm. I do want to talk about that part specifically as well, the lifestyle part of it. Because what about those insiders who left? I mean, I assume they did have some stock. Are they still in the company? What would you expect their plan is with those shares? And what I'm really getting after here, Simon, is to try and understand the potential supply and demand dynamics of the equity over the next couple of months. So what kind of ownership that they have?
Yeah, I would say that probably they had another 5 to 10% between them. I mean, they had options and warrants and obviously had participated in some of the earlier financing. So what I would say is, although there's been a change, everything's been pretty amicable. They understood that it was time for a change. They understood, they did a role of keeping the company alive. As I said, it was an 8-year process to get the federal permits back from the BLM, and that included a 5-year environmental impact assessment. I mean, this is a desert area of Utah where water is at a premium, etc. I mean, there are lots of sources where we are because we're well positioned near the Colorado River. But you still have to go through a lot of environmental work before potash licenses are granted. So yes, I mean, I'm not pointing fingers at them and necessarily saying you should have done a better job. I think maybe there should have been more of a focus on the lithium side over the last few years while they were waiting for the potash permits, but they kept the company alive. They kept the leases, the state leases current. They kept the process moving. And so generally, the changing of the board and the changing of the old CEO has been pretty amicable. He writes to me regularly. So I don't think any of those guys are aggressive sellers. I think they believe in the story. They know this is a good asset, but they also know that there needed to be a change to drive it forward and to fulfill its potential.
But
Potential.
the last part of your answer is what I was getting at. Are they going to be aggressive sellers? I understand. I mean,
I don't believe so. As I say, between Andrew and David, John, and the rest of us, we know that about 80% of this is in very supportive hands. So yes, there is a free float. Part of the restructure, as you and I discussed before, is we are doing a 2.5 for 1 rollback. So, when we close, we'll end up with more like 55 million shares out. Um, and obviously the warrants and the options get similarly cut back. So I think that's a better capital structure moving forward for where we are. And the see-through price would be more like 20-25 cents. And obviously part of what we're looking to do is raise exposure, do a little bit of marketing, bring some new investors in, And I think if the market turns like it looks like it will, and who knows? I'm always positive about a new year, but there's a number of factors that lead me to believe that lithium's bottomed and that agricultural products are going to become more and more of a focus. So I think we're well positioned as we move into the new year. And, I just feel if we can get the stock up, 25, 30, 35 cents, it's a much more appropriate level to then look at what we do next.
And that is also going to be part of the discussion, hopefully later on, as to what you're going to do next. I have another couple of points within my smell test here. My point says potential conflict of interest is that do you or any of the other decision makers or any of your direct family members own or control, either directly or indirectly, any service companies that are currently or are expected to be providing services to American Potash?
My services are through my consulting company. So that's more efficient for me. I SEDI file anything, any stock or options or whatever that are owned either by myself or that company. So that's fully clear. I mean, I think it's quite normal in the junior mining world to contract out your services through
Sure.
a company. It's often done, but so there's no real yeah, I can't see any conflicts of interest from what you're saying in terms of any of the board or management. We all operate in a fairly similar way, and everything is SEDI filed and disclosed.
What I'm mostly referring to, and that is typically how indeed payment of management fee happens. That's fine. What I'm referring to is a drill company, a helicopter company, a marketing company, a broker dealer, something along those lines.
Nothing like that.
Okay.
Nothing like that.
One last point, but not least, do you, and again, what did I say? You or any of the other decision makers within the company own or control a royalty or a back-end right or other asset level obligations on the personal level on any of the projects?
No, we don't.
That's it. When I
Company owns it all 100%.
are there royalties on the projects to begin with?
No,
Nothing. Okay.
nothing.
Uh,
I mean, obviously, only anything that gets imposed by the federal government, but that's really just taxes and that kind of stuff. So there's no royalties to anyone who owned the land formally. As I say, John Gregg was the original founder and put the package together, and that's owned 100% by the company.
okay. Well, good. That makes things easier for me. When I looked at the financial statements on Setter Plus, it said again showing results for American Potash, formerly called New Tech Minerals, which was again the name of the company up until not too long ago, if I'm not mistaken. And New Tech, as far as I understand it, was a precious metals focused explorer. But the company also went through, if I'm not mistaken, the company has existed for about 20 years now or something along those lines in various ways, public and non-public. What's really happening there, as in what's changed now, and why do you think this time could be different? Because again, going back through a few of the name changes and looking at the share price over that period, it doesn't seem like investors did too well with the previous names. So I know you touched upon it in the overview there, but I just want to clarify on what's really changed. Why is this time going to be different?
Yeah, so I think, I mean, a lot of junior mining companies, as you know, go through a number of evolutions. Some of them work out historically, some of them don't. And so, obviously this was a shell that was used to put some good assets in, 10 years ago or whenever John put it all together. So they used that vehicle. And then took it forward. And I think, as I've mentioned to you previously, the company was very well positioned with a great set of assets at the end of the last real big potash cycle. And they were raising $30 million to drive the project ahead, drill, put resources together. And unfortunately, Appian was the fund that was really, I think, focused on writing a big check. As they did the drawdown due diligence, they figured out that the company had unintentionally forgotten to pay its annual concession fees, and the licenses were lost. And so, that was 10 years ago. The CEO resigned, and I think pretty much the company limped along, and then was informed by the BLM a year or two later that there was a process to get the leases back, but you had to completely start from scratch again and refile and go through the process, which is obviously what was launched. As I said, that then culminated in an 8-year process that actually concluded 2 weeks after I arrived. Nothing to do with me. Obviously, the timing looked good, but it successfully concluded in getting the federal prospecting licenses back and a number of holes authorized for drilling and bonded on both the state and federal lands. So, I think what's changed between 8 years ago, where they started that process, and today, really all the company did was survive. They had a CEO that kept the listing current, paid the state licenses, did the basic that was needed to do with the BLM to keep the process moving to get the licenses back. And then about a year ago, I think Andrew and David, as the principal shareholders, were frustrated that there hadn't been more done, because remember, in that time there were also two big lithium cycles, and lithium became more and more a part of the puzzle, and the company kind of didn't take advantage of those cycles either. So they brought in an interim CEO, being Dean Bessera, who I also worked with on the cobalt side. So there's another connection there. And Dean's a guy I know and trust implicitly. And Dean, at that point, filed a bunch of placer claims across all the land to make sure that, he protected the lithium and byproducts for lithium, as well as the state lands, whilst we waited for the federal process to conclude. So, and then he cleaned out the board, and the old CEO was asked to move on, and he then spent several months trying to get me to join. And so, obviously, American Lithium's a much bigger company and at a more advanced stage in a lot of ways. But again, I saw the potential of this asset and the timing, and really trust Andrew and David and Dean and a lot of the players that are involved, and also John Gregg. John's getting on in age now, but he's had a storied history. So I know these are good assets, and so I think what's changed is we finally got the licenses back. We've now got to focus on lithium as well. We have 7 holes that are permitted and bonded. We're ready to drill. Obviously, we need to raise more capital to enable us to do that at some point. And so really what we've been doing is raising the awareness, cleaning the company up, and getting it ready so that as we move into 2025, we can then, start to look at a proper drill program and putting resources together.
Let's talk about that. Let's talk about what exactly it is that you want to achieve with this company. Because again, this is a sub $10 million company right now, which is not an easy existence to begin with, as you would know. But you also have both a potash and a lithium target at the same time. So walk me through your thinking, or the strategy, if you will, behind what you want to do with this company that you think is finally going to result in better performance.
Yeah, so I mean, it's an interesting company, as I said, or maybe I didn't say. I mean, potash has been put forward to be put on the critical minerals list in the US. It is a critical mineral in Canada. 91% of potash is imported into the US market. It's one of the bigger markets globally, along with China and Brazil for potash, and are heavily reliant on external countries. Canada's obviously pretty safe, but then you look at Ukraine and Belarus control about 38%. China controls a piece. There's a bunch of potash comes from Israel and parts of Africa. So there is a question coming about food security, security of supply. So I think the timing for potash is good, and I think with the administration that's starting up in the US, I think that will become more and more. So I think the potash side, the Paradox Basin is the only super basin for potash in the US. There's 7 super basins globally. The Paradox is the one in the US. There's a history of production. Again, this is one of only 2 federally approved projects. So I think it's really well positioned, but we now have to take what is a very big exploration 43101 exploration target put together by Agapito 10 years ago, 600 million to a billion tons, grading 19 to 29%. High grade, and that data all comes from oil and gas logs from across the basin and across our land. So there's good validation for it, but we want to convert that into a resource. So that's what we're going to do on the potash side. To do that, we need to drill, I believe, 4 out of the 7 holes, maybe 3. It's a blanket style of mineralization. We have Intrepid 20 minutes away. We have a bunch of oil and well drill control. We also have Anson to the north and south drilling on the lithium side. So I think 3 or 4 holes gets, and it allows us to move that exploration target to a resource. And then on the lithium side, each hole you drill down, you core the potash sections, and then you keep drilling. And about 2,000 feet below the potash, you have the lithium brines. So in each hole we drill, we can test for both. We can
Hmm.
core for the potash. We can then carry on, leave the hole open for 30 days, test flow rates, test the grade. I'm expecting we get what Anson has found to the north and the south, somewhere between 150 to 200 ppm. They found good flow rates, lots of contained lithium. They did a DFS with Worley on the land to the south. I think it's 1.3 billion NPV and a pretty quick payback. And on the land to the north, they partnered with Koch Industries. So there's a lot of strategic players around us. We've had term sheets from strategic players that would like us to hand them the keys. They do all the drilling, they do the feasibility, and then we get paid out at the back end. My view of the world is I don't think it's smart to do a strategic relationship at 8 cents. I think if we can carry on doing the work that we've done, we've now got all the licenses current, paid up, and we're now ready to drill. And I think if we drill several holes, that it should be a major value creating event for the company. And I think that would be the point then to look at, do you partner with someone or maybe sell something? At that point, do you want to continue as both a potash and a lithium player, or do you look to separate? There's a lot of strategic decisions that come up, but even though I think we could do something strategically now, I don't think it makes sense to do that from a 10 million market cap when I think there's some really good value creation steps, that we're now in touching distance to being able to put together.
Hmm. Loads to touch upon there, and hopefully we'll have time for all of it in this conversation. Otherwise, we should schedule a second one to talk about some of the specifics that you mentioned. But talk to me more specifically about timelines here. You mentioned 2025 vaguely there, but timelines in the context of money. You've just raised about $1 million. How far does that get you, and when are you going to have to raise again in order to go and do that 2025 grow program?
Yeah, so we're just, as you point out, we're just closing on $1 million, in the next week or so here. And that will give us, we don't, as you pointed out, we don't have a big burn rate. So that'll give us, 12 months. There's no big salaries being paid. We're all here for the equity and the upside. And so that'll last a good 12 months if we keep going as we are. Obviously, what we want to do is raise the profile, do a little bit of marketing, getting more eyes on the stock. I think and hope we see a better small junior market starting in the new year. Obviously, that's out of our hands. But assuming we do, I would then like to raise $3 to $5 million, either mid to late Q1, early Q2, where, as I say, we're permitted, we're ready to drill. We just need the capital to do that. And I think $3 to $5 million allows us to do confirmation drilling and to, get an initial resource. So that's really the focus. And I'd like to think we can achieve that in the first half of next year. Obviously, if markets do not improve, it makes it more challenging. But again, I think lithium's turned, and I think potash is in a really good position here.
Do you expect your current shareholders, the people who own that 60%, as well as management, to be signing in for that raise, all of it? Because I mean, if you're already accounting for 70-80% of that stock, that would make financing easier. But do you expect them to come in?
Listen, there are several players in that mix who I think will want to keep their prorated piece of the company, and someone like John Gregg as a founder, for example. So I think there'll always be some following, but I also think if we're raising bigger dollars, this will be the last several raises have been to keep the lights on, pay the licenses, keep the company alive. This raise will be to take it to the next level. So I'll be looking for new investors for some of that. As I say, there are two or three strategics interested in the company, and whilst I don't want to hand them the keys, maybe I could bring one of them in for a piece, either at the project level and maybe some of the financing, or maybe it's more of an institutional raise. I've been pleased to note more activity in the IPO space on the potash side. There was a Brazil potash just went public last week in the US. That's obviously a junior. I've seen Sage Potash, who are in the Paradox Basin as well. They don't have federal licenses and they're further to the south, but they've been raising some capital as well to move their project ahead. So I think there's more and more of a sense that the time is right for this commodity. But again, yeah, I mean, I think a number of the existing shareholders will support, but for the bigger money, we will need to bring some new investors in, and that's part of, why I want to raise the profile and do a little bit of marketing here as well.
Well, you've mentioned marketing now a couple of times, so we should touch upon it as well. And although I understand this was before you joined the company as CEO, American Potash did make a sizable marketing spend already over the last reported 12 months, as well as management fees kept running during that period, so on and so forth, as you mentioned. But so what is that marketing spend going to look like right now? I mean, from that $1 million that you say you're going to close on it very soon, how much of that is going to go into marketing? What kind of G&A are you expecting here?
Yeah, I'm not a huge fan, especially in this market, of spending hundreds and hundreds of thousands of dollars on marketing campaigns that might move your stock price up short term, but then it comes back pretty quickly, is what I've seen happen with a lot of these high end, if you like, or high cost marketing programs. So my view is you have to build it slowly and steadily. I think you want to get some good promotional material out there that the company then puts through its own network. I think we need to do some lead generation. This is a US asset. I tend to find from my history that US retail players and institutions tend to be a lot more patient, than perhaps Canadian and some European. And it's a US story at a time of critical minerals, at a time of Trump, and all of that, which should actually help assets like this. So I think if we can spread the word, bring in some US players and some US retail, I think it would help. But I'm not going to go out there and spend $500,000 on a German promotional push or a push in that you spend $500,000 in a month or two, and then it's and it can help, but it's not going to help you build the company. So this is more about, awareness. It's getting some guys who I know who will help us on the lead generation side, who will provide us with promotional material. Some of that will go through social media. It's more of a traditional build rather than trying to do a big push that's not going to last. So, Rome wasn't built in a day, but I think if I look at how marketing has been done over the last several months in the market, there's been a lot of dollars that have been wasted on that. And I just think, there's a lot of good people like yourself who do a lot of analysis and spread the word. And I think that's a better way to do it. So I would say out of the $1 million, I would imagine, I mean, you've got to do websites, you've got to do presentations. A lot of what you see there is going to conferences, that kind of stuff. So I would say, 250, 300 grand out of that would probably be on more on the marketing side, whether that's just evolving your presentation and your website, attending some conferences, getting some guys to put stuff through social media, some lead generation, that kind of stuff. That's really what I'm looking to do.
And that's for up until you go and drill, or are you thinking that's for the next 12 months? Like what kind of period is this 250 to 300 spend going to be for?
I would say it's probably going to be sooner than 12 months. Probably over the next 6 to 8 months is what I would expect.
Okay. And
I mean, unfortunately, it's not. You do have to get out there and spread the word, and it's not cheap to get on a plane or stay in a hotel or do whatever. And again, I'm not talking about any funky, very expensive month by month marketing that you see out there. I'm talking about more traditional IR and marketing and getting out and telling
yeah.
the story and dealing with groups with good distribution networks. That's really what I'm looking to do.
And I can appreciate that. I agree that marketing has been done horrendously for our space, and it is a black eye on our space as a whole. But that could be a podcast in and of itself. You're coming in as a CEO. How much are you going to cost the company relative to the previous CEO, and will the salaries be tied to performance, or how are you going to plan out that part of the burn rate?
Yeah. So right now, I'm paid 15,000 a month. I believe Dean is 10,000 a month. And we're really the only two. I shouldn't say that. The CFO, I think we have a great deal. It's a contract CFO, but they do an exceptional job. Probably 5,000 a month. And you'll see all this by looking at the financials, obviously. So, I think our staff G&A costs are probably like 30 or 40 grand. So very, very small. I mean, obviously, as the company grows, as we get into drilling, as we hit milestones, those salaries would go up. But we're all guys from this space. So as you know what it's like, if the markets stay tough and you have to cut those numbers back even more, then that's what you do. First and foremost for us, it's about our equity positions, and that's where we're really going to make our money. But if we do successfully raise bigger dollars and work harder and harder on the drilling and that side of stuff, then things will go up a bit, but justifiably so at that time. But again, we're all junior mining guys that have worked together or in close proximity for 10 or 15 years, and we know what has to be done and when it's done. So, again, that's the guiding principle for us. So, we're not looking to be lifestyle CEOs or management. We're looking to actually affect change and take the next steps, which will deliver value here.
I hope that's true, and I will keep you to it in next
Yeah, for sure.
conversations if you did. What are those next milestones that you want to hit? And this is also maybe where you because you said once we hit milestones, essentially performance based, our salaries are going to go up. What is that? And this is also, by the way, where you talk to me about your approach to options and RSUs, as I've seen you've received some, but how is that going to evolve as you go forward?
Yeah, so first of all, our option plan is 10%. So you see a number of CSE companies where it might be more like 20. So, I don't think we've issued anything egregious at all. And again, especially given we have a low salary base. So I like RSUs because I think RSUs only vest if the company does well. So that aligns it better with the shareholders. It also recognizes some of the people coming in are not founders, so they're not going to get any of the early or really cheap stock. So I think they work well. So for me, again, I think this phase since I joined has been about bringing in a proper board, putting a bit of money on the balance sheet to allow us to go out and spread the word. Obviously, getting the licenses back, all the federal state licenses, whether they're Placer or Potash, are all paid up for the next year. So the previous financing that was done that you highlighted, about 600 grand of that went to make sure the company was current on everything. And that's where the bulk of those expiration expenses that you would have seen up to July 31st would have gone. For last year, obviously this year you renew everything by the end of September in every year. So we're fully paid up, we're clean, we don't have any debt, and we're positioned now with, as I say, 7 holes that we can drill on a mix of state and federal land. We're bonded, I think, fully bonded on 3. I would expect that bonding to also cover the other 4. The BLM may ask us to bond additional holes. We'll see how that goes. But either way, we really are ready to drill. We need to do a little bit of more analysis of the historic oil and gas data just to make sure. I mean, we know where the best holes were drilled, and so we've got a pretty good idea of where we would drill 3 or 4 holes, as I say, and so. But we'll probably, we need to refine that a little bit more. But that's not a huge job. And then really the next thing is to position this company so that we're raising money for the bigger financing for drilling, at a hopefully 25, 30, 35 cents rather than at 8 cents. Obviously the rollback helps that. But I'd like to see the company, again, build the awareness to start. And listen, this $1 million financing that I've done, it's only $1 million, but I've had a lot of meetings with a bunch of brokers and a bunch of people. We're in a very much a market right now where it's a show me market. So a lot of those guys like the story, but they haven't played yet.
Mhm.
So again, it's seeding it for the future. So really that's what I'm focused on, and then getting drilling as soon as we possibly can, and either either through the main market, which would be my preference if the stock price gets to where it needs to be, or involving strategic players, perhaps a little earlier than I would like, but if that's what it takes to get the dollars to drill, and some of those players have drilled thousands of oil and gas wells globally, and so they would be a really interesting partner to help us execute a drill program as well, if that's the route we have to go down. For me personally, I would rather we do the work ourselves and then bring a strategic, because I think we'll create higher value that way. But either option, is possible.
Well, you mentioned 20, 25 cents after after the rollback that you're going to do, which is where you're at 8 cents now, I believe. So that's going to put you at 16. So that's the difference there. Is that part of
Yeah,
the milestones?
it's a 2.5. So
Oh, two and
the
a half.
see-through price on the financing is 20.
Okay. But okay, so
Yeah, I would
is
say
that
that's a milestone, Antonio, for sure.
okay?
Yeah, I don't want to be, I mean, if I have to and the money's there, then yeah, would I raise it at 20 cents? Yes, but I'd much rather raise it at 30 or 35 or 40 if we can. And that's really what this $1 million is meant to help us do, spread the awareness, keep building. I'll probably bring in a couple of advisors. There's a couple of really good guys. There's one that's that spent a lot of his career at Intrepid, for example, and I think a couple of those can really help us as we look to get into a drill program, focused on potash and lithium. But then after that, the real milestone is raising the money and then executing on the drill program.
Okay, so what I'm really getting at here when I'm asking milestones is because, or why I'm asking is because I want to get a better idea of when you might expect the G&A to grow. So at what point does the G&A grow? And once it has grown, is the company at a stage where it could comfortably carry it while it continues to deliver on its promises? That's what I'm getting after.
Yeah, no, great question. Listen, we're not going to grow the G&A until we have more money for a drill program. And obviously, when we do a drill program, we're going to hire external drillers, but we'll also likely need to add a couple of additional technical guys on our side. I mean, Dean is a fantastic geo and does a great job. We have a really good consultant on the ground in Moab who's ex-BLM, and he's helped us get the licenses back, and he knows the whole basin and who's drilling where and who's doing what. But obviously, we'd probably need a couple of other technical guys in the mix as we move into that drill program. So that's where obviously you'd see the G&A start to increase.
Mhm.
In terms of, my own salary increasing, I wouldn't expect to see anything major on that until, as I say, we have a much bigger balance sheet and or some success through the drill bit.
Yeah, and that is definitely something we're going to talk about. And it is again financing contingent, if you will. So
Yeah.
that got me thinking about something that you mentioned, which was the JV option. What are you thinking right now? Of course, this is forward looking. That's what I say at the beginning. Of course, there's always forward looking statements, but spinning off, optioning out, JVing, or any doing anything else. What do you what's kind of your gut feeling or your thoughts around that?
So listen, I've always thought if you look at a map, and one of the reasons I joined, we are the meat and the sandwich to the assets that Anson has. So if they are, they have a southern asset and a northern asset with us in the middle. So they're a logical buyer of the lithium asset potentially. We're 20 minutes away from Intrepid. Intrepid's been drilling that asset for 50 years. I think they still talk about a 15, 20-year life left on that mine. But obviously the potential to grow the production and and if you look at us, the potash cycles we have are exactly what they're producing from. So when you produce potash, there is what is known as a Goldilocks zone, and by that, what it means is the depth from a drill cost um, meets the temperature gradient. So the deeper you go in a formation like the paradox, the higher the temperature gets. So around about 5 to 6,000 feet, or maybe 4 to 6,000 feet in that level there is where you've got a really nice zone where the cost of drilling isn't crazy, and the heat of the formation helps you solution mine. So you inject the potash layers with brine effectively with saline solution. Not exactly sure exactly what's in it, but you put a solution in, and then you effectively use the heat and the liquid to put the potash into a liquid form that then gets pumped to the surface. So where Intrepid is and where we are is the Goldilocks zone. That's where the potash is. So from a cost perspective, it's a really nice setup. And so, for them or someone else who wanted to get into the potash world, I think we would make a lot of sense. Right now, as I said, we've had a specific term sheet from one player who's more what I'd say on the oil and gas side, but very intrigued with both lithium and potash. We've spoken to a couple of the majors in the potash side, and so I do think if we wanted to do it, we would have the option of bringing one of those guys in. It's just I don't think we would get the terms we would want. And if we can wait until we do the drilling ourselves, have our own resource, have advanced things more, I think it's going to attract even more strategic interest and we'd get better terms. But if the markets are such that we have to go that route, I think there are options to
Mhm.
maybe sell down part of the project. As you said, maybe you separate the lithium and the potash. A couple of the groups are focused on lithium, a couple of them are focused on potash, and there's actually one key group that likes both. So, it's we'll see how it evolves. It's nice to have that interest level early on, but I think if we can raise our own money and advance it ourselves, we'll be in a stronger position.
Hmm. What is it? Is your and talk to me long term here, Simon? But is your goal essentially to come out with a resource that's interesting enough to your neighbors and you get taken out, or would you like to see this thing built under this company? Again, all in the context of where the market cap is right now, where the financial situation is.
Yeah, listen, I'm always a believer, and my background is much more on exploring and developing. And then I think there are players with building mines, building processing facilities, a lot of capital. There are people who do it a lot better than I can. I could, for sure. I mean, I've taken some projects quite far along the development curve, and we can certainly bring in the talent to do it. So you have to adjust to what the market, what's available in the market. But all things being equal, my view on this is we do some good confirmation drilling. We then put together a good resource. Maybe we get to PEA or even pre-fees. I don't know if we'll have to do that. I think there'll be strong strategic interest at that point. And, either you bring in a key partner who takes a big chunk of the project and you stay involved at some level, or often in that case, it's cleaner just to hand the keys to someone else. I mean, whatever is best for the shareholders. And again, we're all shareholders, and that's, why we're all here. So if I look at it, I think the likely exit for this, if the markets are there and all things being equal, would be that we drill it, we put together a good resource, and then I think someone's going to want to take it out. Or you sell off the lithium and move forward on the potash, or vice versa.
Hmm. Why hasn't that happened yet? Is kind of the first thing that pops into my mind when executives tell me that, because your neighbors, the ones that you have there, they've been in the region for a while, and by the looks of their market caps, they know what they're doing. So if that target that you're telling me about here is achievable, why didn't they pick up this land before you did, or why aren't they, pushing to buy you right now, considering the relative gap in market caps?
Yeah, I think it's always for bigger companies, the question mark when they would buy something. They often, this project, I think, you know, yeah, I think with a bit of drilling, you take away a lot of risk. So I think for some players, they would rather that a company like us or someone does that drilling and then take us out, even if it's at a higher price. I was somewhat surprised that maybe someone like Anson hadn't tried to pick the land up. I think probably there was a feeling a few months ago, and don't forget, lithium's come through a very tough time. So I think they were focused on what they had. I think they probably thought there was a good chance that this company would fold or wouldn't make it, because of its history. And so, as neighbors, I've sort of made contact with those guys. I think also the one that really interests me is Coke. who's piloting right now. And I think for players like Coke and some of the bigger oil and gas guys, once that pilot, which if you actually look at the news on the Anson website a week ago, they had a major success on the pilot. They announced really positive news about the one issue in the paradox isn't magnesium, flow rates, amount of contained lithium. It's been there's quite a high iron content. So they announced like a week ago that they had actually dealt with that. They've now figured out how to produce and recover high amounts of lithium and deal with the iron as part of the flow sheet. So that was a major development. So, long-winded answer. I am a little surprised, but I'm also not surprised because given where lithium has been in the last little while, I think now that Anson has the government looking to put money into them and is making some good strides on their piloting, I think there's more of an opportunity. And I think, on the potash side, it's it's as well gone from a cycle where last year it went up on the back of the Ukraine war and then stabilized a bit, and now it looks like all agricultural products are starting to move back up. So I think it's timing, and I think it's for some companies, they would rather we take the next step. I mean, as I said, there's a company right now, if we wanted to, we could hand the keys to them, but I don't think it would be the best deal for this company.
Mm,
We wouldn't, they wouldn't take us out up front. They would want to do the drilling and then the PFS, and then we'd get paid out at the back end.
sure. There's more to be said there, but I think it is kind of making more sense to me now. Interesting mention on the lithium there, Simon. How much of your new plan depends on DLE? Because although interesting, I don't believe it's been kind of proven at scale, if you will. So yes, how much do you depend on it working again at scale, and what happens if it doesn't?
Yeah, it's a great point. I mean, it is a project that would need DLE. Now, there is, if you look at Anson's work, their DFS with Worley, they use a Chinese technology called sun resin, which does produce about 40,000 tons of lithium carbonate in China and other places globally. So it is in production. Coke has developed their own process. Yes, it hasn't moved into production anywhere yet, but they've piloted it successfully. And then there's numerous other players that are also doing it. There was actually news out yesterday on one technology that's now at the 95, 96% lithium recovery. So to me, it's not a question of if, it's a question of when. And this is the side of the sector where you're seeing Chevron, Exxon, Coke pouring billions of dollars into it. It's just, to me, I don't mean to sound to belittle what's involved, but it is just engineering. And the nut will be cracked. And the reason why you want to crack that nut is, if you look again at the Anson DFS, their op cost is about 37.50 a ton using sun resin. You look at Thacker Pass, which is a $2.5 billion build, the op cost is closer to 7,000 a ton. So if you crack the brine nut, you not only have a lot of supply that comes on, but you're also going to have the lowest op costs. Now, obviously, you look in South America, the grades are such that they can use solar evaporation, which is probably the cheapest of the lot. But these brines across the US with a lower ppm but lots of contained lithium would probably be the next.
Hmm.
So I really do believe DLE, Chile, for example, you cannot now recover lithium brines through solar evaporation. You have to use DLE.
Hmm.
Because the trouble with solar evaporation, certainly on the lithium side, is it's a 2-year process that uses an inordinate amount of water. So DLE is way better on water usage and environmental factors, and so that's another reason why a country like Chile has basically said you've got to use DLE.
Hmm. Sure. And it's going to be interesting to see how that develops. If it doesn't work out, though, and again, nobody wants to talk about that or think about it, but just
Sure.
in the case that it didn't, is your expectation, again, forward-looking statements, because there's not been enough exploration of the project to be able to say that for sure, but forward-looking, and is it your expectation that this potash project can stand on its own?
Yeah, absolutely. I mean, it is. It's a. I know it's not a resource; it's an exploration target. But 600 million tons to a billion at 19 to 29%. You just have to look at the solution mine of Intrepid, 20 minutes away. They've been producing for 50 years. Again, they do use solar evaporation on that plant, and that keeps the cost very low. So they also get about $100 a ton premium for producing inside the US. If you buy potash on the world market, you then probably spend couple of $100 a ton importing it in. So they get closer to $500 a ton. And I think their op costs are somewhere in the 150.
Yeah.
So yeah, there's a good model. Obviously, if the price does increase, which it looks like it will, then that everything helps. But Intrepid's making a decent return right now using solution mining.
Right. Okay. I know you almost have to run here, Simon, in just a couple of minutes. What else is, I assume you did a thorough review before you joined the company. What else is something that, and I call it the magic stick question, but if you had a magic wand and you can just wave it at one problem or one risk that the company currently has, what do you wave it at?
I think for me it's always about people, and that's why I joined this company because I think the asset is really good, and John Gregg is a known commodity. But it's always about people, and I just think the people we have backing the company are first rate. So that gives me a lot of confidence. If there's one thing, obviously it would be capital. We're a junior miner. I want to be able to drill. I could drill, I can't say tomorrow, but I could drill within a few weeks if I had the money on the balance sheet to do it. And I think that's a company maker when we can do that.
Hmm.
So that's probably the one thing. But other than that, I think we've got the right people involved, the right, underlying backers. As you pointed out, they're all very long this story, so we need some new investors to come in. I think that's really the only key piece. I think the knowledge base that we have and the ability to bring in people to help us execute is there. So yeah, it probably comes back to being able to raise that next round to enable us to drill.
Hmm. Well, you've made a lot of promises today, and as I said, I'm going to keep you to them. Hopefully, in the future, in
Yeah.
future interviews, I know you absolutely have to run those. So, Simon, thank you so much for your time today.
Yeah. Thank you very much, Antonio. I appreciate it.